All right, in this video I'm going to show you 3 ways to trade crude oil today on moves like today. And you see the pattern here, huge reversal in crude oil. We talked about this yesterday. So I'm going to show you 3 ways to trade crude oil. The first one is chart analysis, technical patterns. And we're going to go over technical analysis, support and resistance for the first way. 2 is with indicators, more subjective. And number 3 is we're going to do automated trading systems. And so there's 3 different ways you can do this. The first 2 are more subjective. This one is more objective. And so we're going to go over that. Let's take a look at this chart pattern here. We talked about this yesterday actually. There was an obvious support trend line, and oftentimes when you see this obvious trend line, it breaks down. And it broke down pretty good. And a break below 55 was a nice place to get in hindsight. And we saw this. You could have gotten in here at each of these support levels. The first 2 are not always obvious. Usually when it comes to the third one, it starts to become obvious. And then it's just a matter of how long is this going to last. 3 would have been a great trade. 4, you could have gotten a little bit of a bounce and taken a little bit of a profit. But then the pattern was taken out. And the weak hands were washed out at 55, so a break below 55. Sometimes that would have been a good entry point. It's something that crossed my mind. I did not take this trade, but it would have been a good trade, definitely in hindsight, to capture a break below 55 and use almost a key reversal type pattern here to the upside that you see. So technical analysis, support and resistance is the first way that you could have captured this move. I want to show you the second way you could capture this move. So the second way you capture this move is with the market depth pattern. We've been talking about this, how the market has a tendency to go down at night. So here's that washout trade below 55, and this kind of forecasted some selling. So it's slow selling, but you see these moves down, moves down, move down, move down, move down, and then a washout. And so once the selling is over, you can look to buy. And so the blues start to come in. The blues are coming in more, and it definitely is showing a strong pattern for blues here. During the day session, the blues, you will not see these triangles reach the same levels as you do overnight. Basically what this is how long the offers exceeded the bids. And so the bids preceded the offers. So it's pressing into the order book, on the bids. There's more bids than offers, so it's pressing downward, and you get this downward pressure, and you see it leading the way for this long, and it doesn't last that long intraday. There's more market inefficiencies at night, and so you get this long this count that builds up. And so during the day, this is a long time for a pattern, and so it ends up being bullish. As we go into the weekly inventories right here, the market takes off. And so getting in as the market reaccelerates to new highs, and as this right here is building, the blue is building intraday, you have an entry point around here around 55.60. Your stop would be below the low at 55.80 or 54.80. So about an 80-point stop loss, which is not bad because our target is 63, and this could be a setup for potential long trade. To go from the 55.60 area to 63, we're talking $7.50 or $7,500 a contract. And so I'm not saying it's going to get there for sure, but it's a nice start to that trade right now. And once you get in on a trade like this and it moves that far away, it's pretty easy to manage, and that's the benefit of it. And this is the indicator. I want to show you where you can get this indicator. You can go to the website, capstonetradingsystems.com, click on indicators. It's the market depth indicator, and it runs in Tradestation and all the trade stations, 9.1, 9.5, 10.0. It runs in NinjaTrader 8, and it does not work in MultiCharts yet. So that is the market. Those are the market depth indicators. And the third way, I want to show you the third way to trade this. So the third way to capture this move is with the automated trading system. And this is the Crude Oil Weekly Inventories automated trading system developed in 2016. It's part of the members area for algorithmic trading systems. It was a bonus. So if you have the algorithmic trading systems members area, I'll show you where you can get that real quick, and then I'm going to show you the results of this trading system. So if you go back to the website and you click on books, right here, and you go to algorithmic trading systems, and you get the algorithmic trading systems, and you get the once you purchase the book, then you have the opportunity to purchase the members area as well with the code, and it includes a bonus section that includes this weekly inventories report. It's open code. You can see the code. It's a great educational resource if you're learning how to trade and develop strategies. But what are the results of this strategy? I want to show you this. And so this strategy was developed based on this move right here. It had about a year. It was an emerging strategy, really strong equity curve for about a year, where we saw weekly inventories initiate. Any move off the weekly inventories was a trend. And so this had a nice equity curve. It made equity peaks. It made equity peaks. And then for a year and a half, it didn't work. From July 2017 through January of 2019, it did not work. But since the beginning of 2019, this strategy is starting to work well again. If you look at the results, $5,500 in 2019 on 49 trades, over $100 per trade, and you see a nice trade today. So that would have been one way to capture this move. This didn't really work. This is not a strategy that worked well before 2015, and in this time period where it performed poorly, there was a lot of chop around weekly inventories. It would just go up and down. In this time period, a fast move after the report would initiate a trend, and then during this time period, you'd see just a bunch of chop. And now we're starting to see trends again around the inventories report. And so when there's a lot of chop, it's hard to trade, and more than likely, unless you have a strategy for it, want to back away from trading during the inventories report. But if the market responds like this, like it has been in 2019 and the way it did here, then you can take breakouts of that inventories report. And so that's what we see here, is the opportunity to take breakouts. But how would you get away from this time period? How would you manage this during this time period? One of the things you can do is the money management algorithms. And so some of you have the money management algorithm. Some of you had the algorithmic trading systems book and members area. So if you want to get this, set up, you can purchase the algorithmic trading systems book and members area, and then have this strategy. And you could manually consider trading this with a stop loss of $3,000 on the strategy, because that was the worst case drawdown in this time period, and it would be a worst case drawdown during this time period. So you could manually just do that, or you could use the money management algorithms. I'm going to show you how to use the money management algorithms, and it's a tool. It's an open source code tool that I've been developing for over a decade, and it's the degradation algorithm is one of the things that I see working over and over again on many different setups, and it works again on this setup, and I'm going to show you that next. Here's a quick way to set up the crude oil weekly inventories with the money management algorithms. You see here is the setup we looked at, and now I'm going to add it to the money management algorithms. I added rules 8 and 9, and you see how well this does. The performance summary improves. About the same net profit, $108 average trade profit, $31.40 is the worst case drawdown. And I'm going to show you the settings for this. If you'll format, strategies, and double click on it. At CL 1 minute, and we're using MM6 because the MM6 save is what we're using. The limit entry with 0 limit entry points, and we're just using rules 8 and 9. It's part of our degradation algorithm setup. And then we're using for rules 8 and 9, I've just tested 10 and 20. I didn't even test other numbers. And for this setup, I used true, 1 max daily entry. I just did the 930 to 1400, 930 to 1400, which is the time period that crude oil, actually goes from 9 to 1430. So you could play with those numbers. The entry point is from 10:30 to 11, but when you have a money management algorithm, it can get in outside that hour. So you could set it from 10:30. There wouldn't be a position until after 10:30 anyway. And so you could say 10:30 and until they close, because there could be a delayed entry with the money management algorithm based on the rules being met later on in the session.
and then I exited the stock at the end of at the stock market close, and used a $400 stop loss to give it a little bit more room than the basic stop loss. And we also sync exit with the master, and that is a setup that I found for this. There's ways to make this better, I'm sure, and I will keep you notified. And if you have the money management algorithms, you can set this up with the algorithmic trading systems if you have that as well. So you want to be able to trade this strategy. You want to be able to trade this strategy during the time period where crude oil weekly inventories trend. And so during this time period, it trends based on the weekly inventory report. And then during this time period, it was choppy. And then in 2019, it's starting to trend around the weekly inventories again. You want to be able to take those trades if you can, because it can be a good trade. The base strategy has a $300 stop loss, so it's a very low risk for crude oil. And I'll show you where you can get the money management algorithms if you don't have those. So you go to capstonetradingsystems.com and click on money management algorithms. You will come to this page. You can learn more about it. And it's a tool that I started developing in 2005. It includes a lot of open code setups, including the DAX Cobra CTs and Cobra CT3 E-mini S&P. And so this is some setups that you can learn about and look at and learn more about the money management algorithms here. And once again, there's three ways to trade crude oil. The first one we went over was technical analysis, chart patterns using support and resistance. It's really more subjective. And number two is with indicators, which is also a little bit more subjective. And the reason that this indicator is, I've always said, if you have an indicator and a set of rules, you can make a system out of it. But the data we're using does not have historical data. Market depth data is not historical, and it's hard to backtest. It's hard to get a good copy of it and maintain the records on that. And number three is with an automated trading system, and that's Crude Oil Weekly Inventories. So that's three ways you could have traded crude oil today to capture this move. You see some give back here in crude oil. FOMC report is coming up here in about 30 minutes, so it should be interesting to see what happens with stocks and gold and crude oil.